Ryan Cauthen, our director of multifamily financing here. You are a stage-worthy fella. I've seen you on stage more than once at a corporate event. So I'm eager and excited to get you on here and pick your brain for a little bit about kind of the state of the union of our multifamily product and the multifamily market. And before we dive into business, I have a quasi-personal question, if you'll indulge.
Okay.
So much like myself, you're a South Carolina boy, but I see all this FSU garb all over your office. So talk to me about the Florida State life. What took you down there? I'm curious.
Yeah, cool. Good question. I grew up in the upstate of South Carolina and had always maybe had an interest in looking outside of the state for college, and got to the point my junior year and into my senior year, I realized that most people were going to Clemson or South Carolina. And at the time, my sister went to school at Clemson. My mom worked at Clemson. And so it kind of made obvious sense to maybe look at other options. And long story short, I ended up going to Florida State and kind of taking the road less traveled, and ended up being an incredible opportunity and a good experience down there. And I found out very quickly that Florida was quite different than the Bible Belt of South Carolina, but learned a lot, got a great education down there. And from there was able to kind of start, my career and came back up to South Carolina. But great experience for sure.
You built our multifamily program from the ground up. I've probably 5 or so years ago. So talk to me about kind of the evolution of the product and the demand, and then take us to today. Give us a state of the union on where multifamily financing fits into the market. Kick it off.
You're right on the timeline. This summer will be 5 years. And, I was brought in to, really take Lima One's advantages at the time and kind of our niche in the marketplace, and figure out a method and a product that would cater to multifamily owners and operators, not just single family owner operators. And that was really how the concept came about, because at the time we were doing so well, and there wasn't a need necessarily to start a brand new product, but we would finance a deal for a fix and flip, and it would be a triplex or a quadplex, and they'd come back a month later and they'd say, "Hey, I've got this awesome 8-unit right down the road from the quadplex you guys did with us." And there was a time, before we started the program, we couldn't entertain that, right? At the end of the day, everything from how a property is valued to how it's taxed to who can appraise that property, everything changes once you get above that 4-unit count. And so that was really a gap that we thought and avoid in the market that we really wanted to kind of capture. Is hitting on that small balance, or at the time we would call that sub small balance. There just wasn't really a place to go to for that 6, 8, 10, 12 unit that wasn't above $1 million. And if you went to a bank, you had to have all your T's crossed, all your I's dotted, and everything had to be perfect. And we wanted a program, and the reality was we knew there was a need for it, but we wanted a program to not only finance, obviously, the acquisition, but really also create a financing arm for rehab and construction projects as well. So that was basically the premise, the simple idea. And then from there, once we had enough confidence that there was validity in that, from there we wanted to figure out, okay, how can we grow this? How can we make this from a niche product to something that can be an absolute force in the market? And about that time that we created our product, both Fannie and Freddie were, getting their small balance product off the ground. And so what we realized once we started researching their products was, A, we wanted to be similar in some regards, and B, we realized that the product was so good. And if the owner was able to qualify and the property had the exact criteria that Fannie and Freddie required, that there was very little in the market that could compete from a leverage, from a rate standpoint. And so from there, we understood very quickly that not only could we be a provider for small balance loans and sub small balance loans, but we could truly be a bridge lender to connect the people to agency loans. So the property that maybe was not eligible currently now due to lack of occupancy or deferred maintenance or CapEx needs, they could utilize our program for 6, 9, 12, 15 months, work on lease up, seasoning after the rehab was completed, and then go into that Fannie or Freddie small balance product that they would not have been eligible for on the front end. And so it made perfect sense. And then from there, obviously the challenge was getting the word out and selling it. But over time, we have continued to grow quarter over quarter, and are really excited about some of the growth that we're seeing right now post-COVID.
Are there any specific geographies that are just absolutely on fire compared to above and beyond the rest of the country that is on fire, but maybe at a different magnitude?
Yeah, good question. I mean, I think you hinted at it, right? I mean, we're seeing national growth across the board. We're even seeing, obviously there's price appreciation and there's continued cap rate compression, but we're starting to even see rent growth come back, where we had a very quick drop, obviously during I would say about a 6-month period from April of 2020 forward. And we're even seeing some of the rent rates come back, suggesting that there's enough demand now to push those rents higher. But I would say a couple trends are setting in as far as maybe demand beyond the normal. One would be you're starting to see, migration out of some higher cost of living states and cities. And so what that means there is really a movement of jobs, of which people will follow, right? So a lot of the markets that we continue to see a lot of activity in are your strong Texas markets, right? Austin, Dallas, San Antonio. And the thing I think that makes the most sense there is not only are they great, strong housing markets, they offer jobs, they offer an immense ability for families to relocate and strong community atmosphere, but we're running out of metros that can be classified as affordable, and the Texas markets still have several of those for now that you could classify as an affordable place to live. Obviously, we're here on the Southeast. We continue to see a lot of demand across Georgia, South Carolina, and North Carolina. Not only major markets on the Southeast, right? Atlanta, Charlotte, Raleigh, Durham, but some secondary markets, right? Our very own backyard in Greenville. We've seen a lot of requests out of Columbia lately. So I would say that trend maybe is a little bit more prevalent now than we used to see maybe a year ago pre-COVID. But people are very concerned, I think, for those that are in the renting class, as far as taxes and fees and levels of expenses that are out of their control. And so one of the ways to get that into their control is to have more space and make that sacrifice to move into an affordable place. So we're seeing quite a bit of that.
I was at my first conference in 14 or 15 months this past April, and it was a huge topic of discussion, right? The eviction moratorium. And as we sit here mid-May, have a browser up with just tons of articles over the last few hours and the last few days talking about the litigation surrounding it. So can you talk a little bit about how that has affected the multifamily side of the business, and really what the outlook is? Is it kind of bearish, bullish? What's the feeling?
Well, that's another great question, Dalton, and I think a challenging one due to the layers of complexity that we're facing, and also a little bit of uncertainty. But it was pretty consistent, obviously, last summer, to where not only did the CDC have a federal eviction moratorium, but most of the states adopted something similar as well, and they were adopted for a period of 60 or 90 days, and then most states continued to extend that all the way up until November, December of 2020. And that was tough because you had people with job loss, and then you had landlords for, in my case on the multifamily side, we heard from a lot of smaller property landlords. So again, not your mega apartment complexes, but some of those similar properties that we talked about on the sub-small balance, the 6, the 8, the 10 unit size. And they had tenants that had job loss, but they also had tenants who were certainly taking advantage of the system. And so it was a very difficult time, I think, with a lot of vague guidance on what tenants were allowed to do, what landlords were allowed to do. You know, at the end of the day, I think that storm is, I think the worst is over. And so I think now as we're coming out of that and we're starting to see better data on the macro side, whether that's, again, home data, rent data, but most importantly, COVID data, right? I think the worst is behind us. I believe it was last week. There was some discussion, obviously, of extending more CDC protections for tenants. And a federal judge basically knocked that concept down to suggest that, you know, the arm of the CDC does not have, it doesn't have the power to regulate basically a rent control provision or a restriction of enforcing rent payment. And so that was always obviously the issue when most people assumed it was active, is there were states that openly disagreed with that concept to say, hey, I hear you, CDC, but what I'm saying is you don't have the power to do that. And that certainly goes you know, by the state level as far as what we can and cannot do. So now that I think a federal judge basically made that opinion out, we'll see where that goes. It's being contested. I think they're trying to do emergency contesting, and they'll try to stay the opinion to see if that can currently continue to try to offer relief to those who need it. But we are in a little bit of uncharted waters there, and it's very interesting to see how it plays out. I mean, the best stories that we've heard, you know, are those tenants that get an understanding of you know, their landlord and have that conversation, and communication is really key there. Because unfortunately, again, we've heard too many stories from the opposite side where tenants have the realization that they think they're protected by a law and they have a job, but unfortunately they're banding together. And some of the small landlords that we work with have certainly struggled for those that they feel that they can pay, and unfortunately they're not getting that revenue in for their rent. So
given the climate we're in, you know, call it the next 12 to 18 months, really take us through 2022, bullish, bearish, you feel like multifamily is going to keep climbing? You think it's hot and it's going to cool down? What's your take?
Yeah, you know, it's great, Dalton. You mentioned you were at a conference for the first time in over a year, and it's certainly been some time since I've been to one as well. But each year at all those conferences, right, that's typically the hottest question is, where are we at in the cycle? What inning is the ball game in? Where do we think the next 6 to 12 months? And I look back at some of the factors that we didn't know at the time, right? And a couple stick out, obviously one being COVID, but the other being interest rates, where everyone assumed that we were going to see this gradual increase. And in 18 and 19, we saw a nice sharp decline, which made debt even cheaper. And so fast forward, I guess, to today, I'm a little concerned that we could see another pivotal type event, whether that's volatility out of the equity market, which could cause maybe a flight to safety and more of safer and secure investment classes. So I'm interested to keep an eye on that. Obviously, we continue to have political risk across the board, but all things being equal, I'm certainly still bullish. I wake up every day and I'm excited that we did not venture into office or retail at this point, because as we all know, there was a proof of concept for a lot of firms over the last year, and that's, wow, we can be productive without coming into the office more so than we ever realized. And so what I think on a macro play is that we'll see money coming out of those type funds and going into more, whether that's institutional multifamily partnerships, whether that's REITs. In return, you know, I think we'll continue to see the demand from the owner operator side. And I don't think the need for multifamily housing, based on the locations, based on the ability to not own a home, right, I don't think that has changed materially at all. I think there's collection issues, and there's certainly certain scenarios where you have demand issues, but overall, I think the fundamentals are still very, very sound. If it were me, I would certainly continue looking into any type of affordable dealings, right? Whether that's Section 8 or low-income housing tax credits, there will be a continued push to make sure that housing stays affordable. And that's very important for us here at Lima One as well. One of the coolest things I think with some of our rehab projects over the years is that we're able to take supply that historically has been down for 1, 2, 3 years and bring that supply back up, and oftentimes still be below average market rates. Basically creating, again, an additional opportunity for someone to rent that unit. But I'm really bullish on those. I think the government hopefully will make some of those programs a little bit more easier to get the private sector involved. Traditionally, that's been some of the concern, is that the amount of logistics and red tape you have to go through to work with some of those, whether that's acquiring something with a voucher in place, or working on refinancing with lenders who maybe don't have those credentials. Ideally, if there's a more universal process and there's a stronger ability for the private sector to kind of join, I think that will be good for all parties, and certainly where I would put my money, 12 months into the future.
I think one of the big kind of philosophical bastions that we've had, not only as a company, but specifically through the lens of multifamily, has been accessibility, right? We have, compared to the industry, very low loan minimum. We have stabilized option. We have rehab value add. I swear in a past life, you were a salesperson. So what's your, putting your sales cap on, what's the competitive advantage of Lima One Capital's multifamily product?
Yeah, so we talked about, a few of Lima One's advantages revolving around the speed of execution and the fact that we often lend on collateral, whether that be due to the need for rehab or whether that just, due to the size of the property, right, that others can compete with. But, overall, I would say in the marketplace, we've been able to develop an execution level that can be trusted at a very high level. And so we do a lot of our due diligence on the front end, and oftentimes our underwriting team is going to look at deals and submissions as if they were the owner operator. And, we're going to ask maybe tougher questions because we have a pretty strong knowledge background here across the country for multifamily deals, of how this business model is going to take place, right? Whether you're bringing units online, whether you're trying to replace management who's done a bad job, there's typically, an opportunity that every owner operator, especially on an acquisition, sees that they think they can do better than before. And so our job at Lima One is to get to the crux of that. But once we do, there is a level of trust and dependability that we're going to close that deal. And so when people say, why Lima One, right? We say what we do, right? And we do what we say, I think is really important. It's certainly not cliche. It's something that we live by and prove month in and month out, that we're going to close loans, and we see the success stories on the payoff side all the time. And we're excited to continue doing that going forward.
Built a great program, a great team, a very efficient machine and engine over there. I too share the bullish views. Cool. So. Brian, I learn a ton when I have a conversation with you. So thanks for enlightening me on the multifamily side of the fence. Appreciate it.
Thanks so much. Enjoyed it.